Hi everyone, welcome back to Coffee and One Thing with Team Beery. Today we are going to be talking about investment properties and general requirements when you're thinking about buying an investment property. We are caffeinated and motivated.
Yes, we are.
Because our coffee of the month is Folgers Classic Roast.
Yummy stuff.
Like growing up, this was totally my dad's favorite coffee. So funny. Came in a green can.
Oh, yeah. And then you open that up and you're like, oh.
Yeah, that.
Yeah, for sure.
A steal of fresh.
I don't know. I get that feeling about a can of peanuts.
Yeah.
Nice.
All right.
So we are talking about investment properties and like what you need if you're thinking about being an investor. What do you need to know? Like what are the things out there that are just kind of common knowledge? If you're doing it, you just know these things. But if you want to jump in, there's a learning curve. So let's kind of address some of that stuff. So your higher interest rate because you're not owner occupied. That's a big one.
And that's true even with like a second home.
Right.
Yes.
Right?
Used to not be,
because it's not your
but
primary.
it's changed.
Yeah.
Right.
But if it's a non-primary residence, I mean, that's something that you may have to deal with.
Right.
Talking to a lender, figuring that out.
Right, for sure. And you could, and here's the piece that we're going to do a little disclosure on is it could become construed loan fraud if you say that you're buying it as a primary residence, but then you go and you rent it. And so obviously
Cannot lie.
We want to make sure that you are good Boy Scouts and Girl Scouts and make sure that that you don't do that.
If you sign a document saying, I am purchasing this property as my primary residence, if you don't
Move
live
into
in
it,
it is loan fraud.
So.
Please don't do that. We don't want you to go to jail.
No.
Okay.
All right. So there's that.
I have a question about the interest rate. Is it like a percentage higher? Is there a rule of thumb?
It always fluctuates. It just depends on.
It may depend on who's offering the loan.
And it's your credit score, and it's your. I mean, it's this kind of same thing.
So you could have a low 3.5 interest rate on your home, and then on your investment, it might be a 5 or 6. Just depends on your.
Right.
All right.
Because it's a higher risk for the loan company.
Correct.
Right.
And you also need to show proof of reserves.
Yeah.
Proof of reserves. So they want to see that if something were to go awry, that you would still be able to make those payments on that property for at least 3 months. And I've had some lenders all the way up to 6 months.
So is that like a bank account?
That's liquid cash that you could get to.
Yes.
Okay.
So,
bank accounts. The bank statement.
Yeah. Well, but I've had people use their 401k for that. So,
okay.
So if you have to have money behind you somewhere that can qualify.
Right.
A lottery ticket.
What happens?
Doesn't really happen. Yeah.
Scratchers. Well, and that makes sense because if you have a tenant in place and then all of a sudden
they're not there.
Just move out in the middle of the night.
An IOU from a poker game?
I don't think that counts.
Okay.
No.
Just checking.
So 3 to 6 months reserve.
I've never participated
to cover the
in
mortgage payments.
Nice. So
and the down payment's higher?
And the down payment is going to to be higher.
What are you doing?
Than the obvious. Like if you buy it as an owner occupied, you can buy it with just little as much as 5%, sometimes 3% down. But if
depending on your loan product.
Yeah. But if you're buying it as a investment property, you're probably looking at 25-30% depending on credit score and
are
what you've got.
Are they typical conventional loans then?
Typically always a conventional. You can't buy FHA as an investment.
Right, because FHA requirements, even VA requirements, have to be an owner-occupied property.
Right.
Because those are government-backed loans.
Exactly.
And they're only helping people with home ownership, not
being investors. And not trying to help you build your net worth. But that's okay because there is tools out there to help you through all this.
Because I've had investors go through and do like private loans.
Yep.
Private loan companies. So there are definitely
they call
resources.
that hard money. Yep. And it is out there for sure. But you do know that that's like a 12 to 18% interest rate.
Right.
So you got to know you're going to pay a little bit more.
Has to make sense.
Right.
And that's why you talk to Deb.
Yeah. And Team Beery, because we can help guide you and get you into that first one, because that is the scariest. It's like pulling the trigger is the hardest part. once you have your first rental property, you'll be like, why did I not do this faster?
Right.
So,
and that's true about a lot.
A lot of things, absolutely.
So
okay, so
what else?
Next piece of this is if you own other properties, you must have them leased for a year before they will let you kind of use that. Money as income.
Oh, okay.
So sometimes people think, oh, well, I've already got this rental rented. You know, I'll jump in 6 months later and I'll go buy another one. But that money isn't really your money for the whole year. They got to see a full year of income coming in before they can give you that.
Because it's all about...
Yes.
Yeah. Okay.
Because it's all about your debt to income ratio.
Right. Right.
And whether or not you're a good risk to loan money to.
The next one. Yeah.
Okay.
Right. And then too, isn't it where if after 4 properties, and then it can get more expensive?
Depending on which one you go with, Fannie Mae or Freddie Mac, there's different overlays on that. I think up to 6 is what they all have
6
said.
properties?
But there's certain, like I think one is 4. So it just depends on which qualifying, account that the lender decides that you fit into. Do you fit into a Fannie Mae? Do you fit into a Freddie Mac? You could go up to 6 in some cases. But once you do that, you've got a lot of assets, so you might choose to go start getting commercial lending instead, because now you've got to kind of group all that together. So there's a lot of strategies there.
Well, yeah, and if let's say you if you own 4, can you get a loan on 6 of them? I mean,
if you own
10.
4, what are you talking about?
Well, if you own 4 of them outright at some point,
cash.
Oh, that's different.
Then you want to borrow money for more, you have to stay within the rule.
Well, because if you own a property,
you can lend.
Then
that's your asset.
Debt.
That's your
asset.
asset.
An asset. So that's different. Okay. We're talking about if you have mortgages.
You only allowed 6 mortgages.
It depends on the lender, but once you start, once you've got all these,
could you say it in unison again?
We did that pretty well.
Yeah.
But once you have that many mortgages, or loans, they're looking at you going, "Is this worth the risk?"
I'd be looking at me, "Is this worth the risk?" That's a lot of. That can be a lot of money.
That could be a lot of money. But that's also where you get to the right lender, and the lender can decide, maybe at this point we group all of those loans together and we get you into a commercial loan. And because commercial loans have different requirements. And so there's a lot of strategies that we can do, but we're kind of talking about like just the first time you've bought a house, this is your first investment, what do you need to know? And that's really the basics of what you need to know. So,
and then there's tax breaks and
there's
stuff.
a lot of tax breaks. Deb gave us some great tips. Deb Martinez.
Episode 36 was with Deb Martinez.
Right. And she gave us some great tax tips on how you can, like, just keeping your receipts, you can offset some of your capital gains based on
about maintenance, upgrades to a property. I'm sure as an investor, it's even more important.
Absolutely. Yeah.
To keep those, accounting. And their company, Martinez and Schenken, also do accounting for small businesses.
And little LLCs that want to kind of keep track of things the way they should keep track of things.
Yeah. So a really nice resource.
Absolutely. So those are kind of our tips and tricks. There's Opportunity Zone she was mentioning. So if you want more information about that would be another great thing to, have her talk to you about, because that is actually a really good resource for some income.
And we have a few resources on our resource tab at the website, teambeery.com. So check out, if you have questions, check that out.
Yeah.
And thanks for tuning in today. We appreciate it. Y'all have a great day. And don't forget to like, subscribe, and share if you know somebody.
Hit like.
No. This is not the Facebook. The YouTube.
The YouTube.
Anyway, like, share, and subscribe. And reach out if you have any questions and if you have suggestions for other podcasts.
And if you know somebody who's thinking about buying or selling a house, this would be a great episode to kind of walk them through what they need to know about buying an investment property. So,
all right.
Always use
a very good team.
Bye.
Bye.
Bye-bye.